Hey everybody, my name is Kyle Knott, and I am not your average finance guy. We're going to talk a little bit today about insurance, and there's four types of people. So four behind me there. Um, Four types of people when it comes to insurance is they hate it and they avoid buying it at all costs. The second type is they hate it but they buy it because they know they need it. Third type is they like it but they misuse it, and the fourth is they like it and they use it properly. So I'm trying to get everyone into number four. They like it and they use it properly. I think it's a great tool. But back to, they hate it and they avoid it at all costs. I understand it. I'm talking infinite banking policies here in life insurance, car insurance. I hate it. I'm a good driver. I never really get into have had any issues, but every year my cars are worth less and less, and I have to pay more and more in insurance. And it just keeps going up. I hate it. I have it just because I know what could happen if I don't have it. But I guess maybe I'm in the number two part when it comes to auto insurance. So the hate it, but I buy it because I know I need it. But there's some people out there. When I was 16, 17 years old, I got hit by an uninsured driver. So I had my right blinker on, took a right turn, and he thought I was turning left for some reason, and he hit me in the side of my car, did a couple $1,000s worth of damage. Luckily, I had insurance that had uninsured motorist protection on it. But this guy, he hated it and he avoided it, but it come to bite him because he had to end up paying for all my repairs, I believe. I think they went after him and got it out of him. So I wouldn't go that route. Hate it but buy it. Okay, go there if you got to. Um, People at number three like it but they misuse it. I've known people that, there's a little hailstorm that comes through and they have a little bit of, a couple marks on some of their siding, and really it's not a big deal, I wouldn't think. But nope, they call up the insurance company. Hey, look here, we had some hail. I need some new siding on just this little part of the house. There's a couple marks, no holes, no big deal. But they misuse it. And to me, if the insurance company sees, oh, this guy really likes to use his insurance, maybe it was only a $750 repair and you got a $500 deductible. To me, that $250 that you saved isn't worth it because your premiums are going to go up. And to me, that doesn't make any sense. But there's a lot of people out there, they like insurance. Hey, damn it, I paid for this insurance. I'm going to use it every chance I get, and I'm going to stick it to the insurance company. Well, guess what? The insurance companies always win. So I don't go that route. And then, number four, like it and use it properly. Those that like it and use it properly are, in my eyes, the IBC practitioners. They're the ones that understand what they've got and how to use it throughout their entire life, not just for the death benefit. And to me, that's the epitome of, like it and use it properly. And that's what I'm trying to show everyone here. So the next big question is, what's the right amount? How much do you need? So there's three things that you kind of look at. It's price, cost, and value. Not too far from me, there is a big building that was going up, being built, and so the multi-million dollar structure going up, and I drive past it every day on my way to work, and I see that there's cranes up, and they're putting everything together. I mean, huge cranes, a lot of stuff going on. And one day the crane was just stopped. I'm like, all right, well, maybe it was too windy, the weather wasn't right, whatever. The whole next week, the crane still didn't move. After that, it was a month. The crane's there now, they're starting to tear the crane down. Like, they're clearly not done. Like, what's going on? Well, rumor has it that the entire structure was sinking. And this is all rumors, but what I heard is at the engineering phase, they had to drive the foundation down. One engineer said, if you go down to this sand layer, you'll be okay. And another engineer said, well, you might be okay, but I would hedge my bets and I would go all the way down to bedrock. Well, in doing that, what's the price? The price of only going down to the sandstone or the sand layer was a cheaper cost. I think they saved like $1 million by not going all the way down to bedrock. But now what's the cost? They didn't go to bedrock. Now the whole building is sinking. So you saved a little bit of money up front, but now what's the cost? I heard it's going to be over $100 million to go ahead and fix it. And actually, last time I drove by there, they're starting to tear everything that they had all kinds of steel racking and everything up, and it's just all laying in a pile. All this brand new steel is now in a pile, and who knows where that stuff's coming from. Hopefully it's not from overseas, because now we got a 25% tariff they're gonna add on top of that too. So where does that get you with your value? So sometimes the cheapest price isn't always, the most bang for your buck, isn't the best value, because a low price can have a really high cost. Another example is the levees in New Orleans. You know, maybe they were built for a low cost and they were maintained at a low price. But once Hurricane Katrina came through, those things weren't built big enough, and I don't know how you could ever would have thought they would be built big enough for that. But those levees gave way, and now what is the cost? You had maybe the price was a little bit lower, but the cost is astronomical. So what is your life worth? What if you pass away, and if you're a single person and you have no wife, kids, no family, and no one's really gonna miss you that much, or I'm sure people will miss you, but not financially. You don't have people relying on you. I've got a lot of mouths to eat, and I've got a lot of people relying on me. If I pass away and I can't earn any more income, what's my family going to do? So that's the way you really have to look at that price, cost, and value. And there's a house if you insure your house, then if you have a $500,000 house, the insurance company's not going to let you insure it for $10 million. And every time something happens, if it burns, you'll burn your own house down and collect $10 million. So there's obviously rules, and they don't let you do that. So life is a little bit different. They look at there's a bunch of different things that they do look at, but you usually want to go towards the higher end of that, and not only just to keep the wheels turning, but where are you going to be in 10 years? What do you want for your kids, and where are things going to be? What are the goals and dreams that you have, not only for yourself, but for your kids? And just some things to think about. And when it comes to life insurance, everything I've ever heard, you want to insure your life for the most there is. And hopefully we're not going to die for another 30 years. So if we've got whole life insurance in place, what's the world going to look like in 30 years? Inflation's going to be way up. Everything's going to be more and more. So you want to kind of bump that up as high as you can early on and get that moving. So, all right, that's what we've got for today. 4 types. What type are you? Let me know in the comments, and let me know if you got any questions. All right. Good luck, everybody.